The products that actually, the stablecoin products that have full integration and payments in neobanks and have use cases in the real world and have on-chain liquidity, holders, and growth, they will be the ones that have a breakout.
You know, there's kind of these this synthetic dollars and then real, digital money. Where does this one fall? And do you think it's poised for growth? Do you think we're going to see more states?
Do you have any predictions, any personal predictions for 2026, whether it be for Frax, for stablecoins, or just generally like further how you see, like what core themes you see really happening this year? Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering fraxUSD and Genius-compliant stablecoins. This is the Stablecoin Super Cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to episode 15 of Stabled Up, our weekly premier stablecoin show with our lovely friends at Frax. Today we have Sam, the CEO and co-founder of Frax, to kick us off for 2026 first episode of Stabled Up. Happy New Year, Sam.
Happy New Year to you guys too. It's good to be back. First full week of 2026, right?
Yeah, I told Rob it feels like syllabus week this week, which was like the first week when you're back in college, and it's kind of like, you're getting your syllabus. Everyone's like circling up, let's schedule a call, let's circle up, and so it's kind of getting back into the motions here.
Yeah, definitely. And then there's a lot of things in Q1. I think that people, especially us at Frax, but I'm sure we're not the only ones that have signed these deals, exclusive deals, MOUs, and they're all like, let's not go public with it, right before Christmas and stuff like that. And I think that really applies to the stablecoin payments and DeFi space, because even though we have a bunch of huge stuff to roll out, I think we're not the only ones, and I expect to see a lot of big rumblings, especially from what I've been hearing.
Yeah. It's exciting times. And we've been thinking a lot about this even over the holidays, thinking about how, what coming into 2026, what are some of the trends and narratives to watch out for? And stablecoins, payments obviously are going to be a really, really important part of this new what we're calling neo finance, which is sort of this evolution of, we're kind of like leaving behind the legacy crypto infrastructure era, leaving behind legacy finance and, traditional banks and that sort of thing. And kind of these two things are converging in this neobank sort of world. Stablecoins, payments are a really important piece of that. What are some of the things that you sort of ended off 2025 on when you're looking ahead to 26? Like what are some of the big stroke ideas that you're excited about?
Yeah, I think 2025 was obviously the genius year with legislation and stuff, but it was a building year for a lot of the industry, but us at Frax, but also institutions that were like, okay, let's get something started. Let's actually get teams, the digital asset team, sign deals and things like that. I think 2026 is the hockey stick year, especially for people, institutions, projects, products that have laid the foundation. Basically, a lot of these things, they were just getting started, right? And so if you look at, the classic hockey stick chart of like startups, right? It's very, very, very slow, right? And it's linear. And then there's like an inflection point that literally turns it exponential, right? And I think 2026 is the year of the exponential. I think Hasib had this like long post, the exponential. He mainly meant it for like the L1 stuff. It was like a monad centric post, but I think there will be a few breakouts in 2026 in the stablecoin space and the neo finance. That's a good category name that you guys have. That I think obviously Frax and fraxUSD will be one of those. I have my eyes on a few. I think also just in terms of partnerships that I can talk about, like I think Stripe, Bridge, and Tempo. So like we're very big partners with Bridge. They're actually working on full orchestration internally with fraxUSD as well. There aren't that many stablecoins that directly you can just do it. Usually you have to go through like USDC and USDB in their systems. And so this is one of those, and we have a really big use case that we're going to announce publicly in Q1 that I think is no one else has this particular use case. So it'll be really exciting to highlight that once we're able to go public with it. And so the important thing is these big integrations that finally come together with a few of these large companies. We're also on Tempo building for the day one genesis of the chain with their new technology, and fraxUSD will be there with Flywheel tokenomics, yield streaming, bringing that famous DeFi type of economics, as well as the T-bill underlying reward system using Tempo's own TIP20. It's actually a really, really cool system. Dan Robinson and those guys over there have really cooked in terms of how the tech stack there works. So it's a few of these things hitting critical mass, and it's going to be a few projects, right? I'm looking, and I have some opinions on who else it's going to be. And I think by the end of Q1, people will see kind of who will dominate the next 6 months.
Yeah. I mean, I think this neo finance category is like this convergence point where legacy finance companies and crypto native companies meet. We had Mike Novogratz, the Galaxy CEO, talking about a shift from these narrative driven tokens to business driven tokens with measurable value and profits, expecting this general structural transformation where wallets and exchanges may evolve into these neobank type platforms. You've got this kind of new superset of fintech where you got these very easy to use consumer front ends, DeFi backends, business driven tokens, institutional bids for these kind of DeFi blue chips with sensible value accrual. There's this focus on this persistent buybacks, financial discipline, transparency, openness. And yeah, it just seems like these stablecoins, RWAs, lending, asset management vaults, these types of categories kind of leading this year's charge. It's like this evolution of DeFi, and it's really like this convergence point. And I think a great example is exactly what you said with this orchestration work that you guys are doing with Stripe and Bridge. Is again like this kind of convergence where it's like you got this Chad neo finance versus like the Virgin high float, low FTV L1 with no kind of like, product market fit, not a lot of use case activity. And then you've got a lot of differing opinions. But our through line this year is definitely that this general sector, and there's a lot of kind of like subsectors, tokenization of stablecoins, payments, vaults, neobanks, cards, etc. Right? Issuers, right? All these little subsectors of this broader idea, we think is going to be the biggest area of growth and interest this year. So passing back to you with this context in mind, also with your kind of roadmap in mind, do you have any predictions, any personal predictions for 2026, whether it be for Frax, for stablecoins, or just generally like further how you see, like what core themes you see really happening this year?
Yeah, for sure. Definitely. I think there's like two main parts to it. One is I think this year is going to be the year of unification. And there's multiple ways to describe it. One is the economics of tokens or equity-like tokens, whether they're buyback, burns. I think, putting aside the stablecoin products and stuff for a second, I think everyone saw, the Aave clarification governance proposals, the other things of like, does a token have IP and all these things? Is there, one token? Is there multiple, like the sub-DAO model and all these things? Do burns and buybacks actually work? There's a lot of posts I saw that, people are like, look, everything, the altcoin space didn't have that as good of a, 2025 as people thought. Even the ones like Pump and others that are like buying back and burning, millions of dollars every few days. I think it's going to be the year of unification in the sense like all this stuff is going to get clarified. All this stuff is going to, for the good tokens, right? Like, for example, with the Frax token, it does represent the entire intellectual property of like the Frax DAO and all these things. And we have always said these things, and it gets the entire income. There's no labs entity, which usually I actually described, Uniswap as an example, and then they fixed it. And then the major props to Uniswap, in fact, the unification proposal. And I think I want to say that this is the year of a lot of important tokens that will do well, investments that will do well, will have this kind of clarification, whether they do buybacks all the time or whether the buyback works, it will all be unified and clarified, right? And I think those are the most important things. So I'm like glad that the Aave DAO is taking care of that. Uniswap, major props to them. The good thing is with Frax, we've always been very clear: one token, one vision, one mission. And I think that's one of my predictions. The best tokens will have clarification. On the product side, I actually think that there's going to be products that are end to end, which means like the products that actually the stablecoin products that have full integration and payments in neobanks and have use cases in the real world and have on-chain liquidity, holders, and growth, they will be the ones that have a breakout. And so, for example, Athena is really, really big on-chain, and I'm interested to see what they do off-chain. For like fraxUSD, we actually have a really big partnership proposal going through Aave governance right now. And I can talk about it because it's public. And so we have this unique risk-free yield streaming system into Aave so that lenders actually earn a lot more by lending fraxUSD, and then borrowers, it's cheaper because the lenders are getting more, so borrowers have to pay less. And then we've done a lot of work with Mark and the ACI group to make sure that fraxUSD's settings are identical to the big two, USDT and USDC, the emote settings, the collateral settings, the reserve factor, all of these things, so that all things being constant, which they are, we've worked with them on, then it is objectively better, this Genius compatible stablecoin that is redeemable, is a digital dollar. Why wouldn't this become the economic engine of lenders and borrowers in Aave? And then obviously with Aave's V4 release, we're also discussing things big there with them as well. And then this is just the on-chain stuff. There's a bunch of off-chain things that you guys know that we're working on. I think the end-to-end is what is the most important. I'm really interested to see what products are end-to-end. If a stable coin is just in payments, but it has literally no holders, no use cases on-chain, I don't think that it's going to be a big year for them. If a stablecoin is only on-chain and it is only, for example, a looping stablecoin or something like that, I'm not really sure if that's a hockey stick year for them in the size that it is for things that are end-to-end. And there's actually a good analogy that I was just thinking of the other day with this. And I know Kyle Samani hates analogies, but I think this one is actually very apt, because if you guys know about like Waymo and Tesla's FSD, I was actually looking at listening to Andre Kropotkin on a podcast, and he said most people don't know this, but Waymo actually has a human in the loop. There's a 5G connection, and then they use maps and additional modules for Waymo's self-driving, and it is not purely self-contained end-to-end in and of itself. And so if you guys saw the news a few weeks ago, there was a huge power outage in SF, and a bunch of these Waymos were literally like stopped in the middle of the street because people couldn't connect, the Waymo employees couldn't connect to them or beam in, and then also the GPS and stuff was off. But then Tesla, which is entirely self-contained, it's an on-chip, on-vehicle AI chip with cameras and direct reasoning, right? There's no internet connection. It entirely is self-contained, full loop. They were totally fine. And so I think that this is an interesting thing, because Tesla built something that's scalable end to end, and it's extremely valuable. Even though it looks kind of similar to Waymo, the Waymo model doesn't seem to be, at least from what I understand, to be as scalable. And it's actually much wider distance between like Tesla and Waymo than people think. And so what I was looking at is, how are these stablecoins actually used? Is it end to end from off-chain, on-chain, DeFi utility? Is there an actual utility in every single layer, or no? Do you have to swap to USDC to like at checkout, or like on Coinbase, or do you have to swap to USDT because people don't accept it in the geographic region you're in? Or no, is this thing fully end-to-end, an actual digital dollar with utility on-chain, off-chain, in the neobanking layer? And it's difficult to do, right? Because usually you start in one place, and then you have one niche, and then you sort of start expanding, and you have to expand to the right layers Otherwise, you won't, in my prediction this year, you won't get that hockey stick growth. So for me, I think it's the year of unification when it comes to investments, economics, and price action. And then it's the year of end-to-end scalable integrations, which the Neo finance layer actually solves and finally connects to the real world.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
It makes a ton of sense. And I think one way to think about this unification process and this fully end-to-end model, this full stack model that you're talking about is verticalization. And we hear a lot about this, especially as we were kind of coming from this modular world, kind of like encroaching upon monolithic. And so I guess Frax as an example here, does this unification, this verticalization of the stack, does this mean you guys, are pursuing like a neobank to augment the stablecoin, the fraxUSD stablecoin that you guys have? Or how when you were looking into this and you were looking at what end-to-end use of a stablecoin looks like, what did you end up finding? Did you end up finding like, okay, most of the time it is used in any particular venue. How can we service those venues better? And what are you guys doing to help unify the stablecoin flow?
Yeah, so as you guys know, like we have the FraxNet platform, which is basically a full mint, redeem, virtual accounts, fiat on off ramp, and also virtual card compatible system. It's not meant to just, it's not necessarily a UI. It's also, you can integrate it with APIs, on-chain transactions and all these things. In fact, the stack with fraxUSD is that all the collateral is Genius compatible RWA, so you can actually mint and redeem directly on chain if your entity actually has the ability to touch RWAs. And so the whole stack is programmable. Our view is that we want all of the top neobank products, like we're working with EtherFi, to actually have deep native fraxUSD spendable and reward streaming. And that's something that we're really excited about. And we'll give like really deep details on like how to actually spend it. Right now, like USDC is the only like deep spendable, like you can, stake and then they can pull, get a loan to spend, but the loan is in USDC, right? Like yeah. you swipe the EtherFi card, and then like what actually is spent is USDC. We're working with them to actually have fraxUSD be digital dollars that are the second one after USDC, right? This other default, so to speak. I kind of call it the third default money after the big two, right? After USDT and USDC, you need to actually have the neobank utility, the integrations and other platforms, and provide the actual infrastructure and utility for everyone to be able to use it, like our Aave integration on chain, like the EtherFi stuff that we're rolling out, the orchestration that we're going to announce soon with Bridge and a few big clients. Like you can't have a stable coin where you use it in one small area in DeFi, and then if someone wants to build like a wallet or card, you have to then swap it to USDC because it's not orchestrated by Stripe, WorldPay, and there's no banks for it. So then really what you're doing is you're using USDC, and then in this tiny, single pool on an AMM or like a lending pair, you're using this synthetic dollar, right? There's a difference between money and a synthetic dollar product. And that doesn't mean synthetic dollar products are bad. They make a lot of money, right? They're a good savings or looping or like vaults, but there's not going to be that many hockey stick digital dollars because it requires a different set of utility and use cases on the full stack. And so with fraxUSD, we are looking to be one of the few, in my opinion, the third default, so to speak. And actually, PYUSD, I've looked, is doing some great things, and we're talking to them in that area as well. So there might be a few more, maybe 4 defaults, so to speak, in 2026. So I've been keeping my eye really, really on who is building FSD of stablecoins, right? Like from a foundational perspective, who's actually building the thing that scales, right? Instead of kind of taping a bunch of things together, if that makes sense.
Yeah. Sam, I'm curious to get your take on this product called Rain. I'm sure you know, Rain, that they power a lot of the crypto cards. I've heard a lot about it and how it's so important to all these crypto cards and how people are expecting a ton of growth there. Um, could you just maybe educate us on what Rain's role is in kind of like this neobank idea, and like why you have to have like this, like, I don't know if it's like a coordination layer or it's like a facilitation layer for spending, like, and like, is that competitive with Frax? Do you guys work with something like that? How does that work?
Well, hopefully this answers your question, that it's actually really positive sum with Frax. I have a call with Rain actually in an hour after this podcast
Great.
is over. So we love them. They're also Dragonfly Portco,
Yeah.
really great technology. The way that I think say is that the exciting thing about 2026 as well is that there will be a lot of new on-off ramps or bridges that essentially to the real world that never existed before, right? And those will actually bring on the next 10, 50, 100 million users into crypto through stablecoins and through payments. And bridge, this bridge, like basically Rain is the bridge for cards, right? There's other things that we're actually experimenting with, like, if people can withdraw PYUSD or crypto from PayPal now, right? It's technically an instant settlement on off ramping, right? Before, everything was so clunky because you had to have centralized exchanges where you ACH money and you convert it to crypto or stable coins, and then like you withdrew it to your wallet or something, right? But now you can actually use what was in the fintech layer, right? Like maybe you can actually use Robinhood. If you're a trader on Robinhood, you can withdraw Robinhood crypto, and then if you can orchestrate those withdrawals to just simply be API endpoints, right? Like let's say you trade some stocks on Robinhood and then you want to withdraw fraxUSD or PYUSD, whichever they end up, and then you load it immediately onto a Rain card, whether it's EtherFi, whether it's something that we co-design with them or all three of us together, right? It's a lot of composability and bridging to new user bases that before you had to withdraw to your bank, and then you had to go from the bank to like a centralized exchange, and then now it's as simple as an API call. So Rain is an innovator in this area because they literally made Visa cards the on-off ramp for everything. And so we have some really cool concepts to show them because we're connecting these different on-off ramps. And so like imagine like a card that you can load from PayPal, spend, and then withdraw to your wallet, and then go to Robinhood, trade, and then withdraw back, all in a very, very seamless way where it becomes literally the centerpiece of your financial life, because you can hold crypto, you can spend it, you can trade, and then you can immediately withdraw it on the spot or get a loan, maybe through Aave or Fraxlend or something like that, right? And so it's kind of like the, again, unification of a lot of functionality in a single stack.
Yeah. Yeah. No, I just heard from Hasib on that, but also just been seeing more and more and realizing that all these cards are powered by it. And now starting to understand a bit more of like the Frax vision, as well as just the general way that the space is likely to progress. And how important to you is like this interoperability between different applications or different kind of like consumer facing apps, right? So you mentioned Robinhood, you got PayPal, there's things like Venmo, then obviously you've got like the MetaMasks, the Phantoms, and then like the centralized exchanges, Krakens, Coinbases, etc. Like, are you building for a world where it's like very seamless to operate across all these different, what would have previously been barriers, or like how is that space developing from your perspective, and what do you see there for this year going forward as far as these kind of different silos, bringing composability together via stablecoins, via cards, etc. Like, how is that going to change this year?
Yeah, it's a good question because I think I've always had like a stablecoin maxi view
Yeah.
of this stuff, which I actually thought that like stable coins, the ones that are like USDT, USDC, hopefully this year fraxUSD, they're actually the interoperability packet between all of these places, rather than like an intense framework or some kind of like bridging product. The actual economic value packet, right? Like the TCP/IP packet of value is these stable coins that are able to flow between all of these places. And it's very difficult, right, to actually get stablecoin to be money and to be accepted as a dollar on Robinhood, on PayPal, at Stripe to orchestrate with it directly, right? And so these things will be connected, but only through a short list of real money, right? Like the whole point of the dollar is that it is literally the economic packet, data packet, right, between different ledgers. And the ones that will do this like value transfer between ledgers is actually I think in the next 5 to 6 years is a multi-trillion-dollar opportunity. It kind of I actually think it'll be similar to how quickly Polymarket got really big, because a lot of people, and honestly, I'll admit, me included, are kind of down on prediction markets, because for like, since 2015 or 16, when Augur was the first Ethereum ICO, a bunch of people tried to build prediction markets. They didn't go anywhere. It seemed like a seasonal niche of like, it just pops off every time there's a really big election, or like there's a World Cup or something, and everyone wants to bet on like a big game or something like the Super Bowl. And then, it just becomes kind of irrelevant. That's honestly what I thought the empirical data showed. But Shane and the Polymarket guys, and then also obviously the Kalshi guys taking from a different angle, they just stuck to it, right? And then now it's bigger than anything, that anyone's ever seen in crypto, and it's probably just going to keep growing, right? It's going to be a year of elections, World Cup. I think this is how it's going to be, where people are going to predict, there's stable coins are going to be fragmented. There's going to be like, a bunch of like white label stable coins, and it's only going to be used in silos or whatever. And it's going to be really popular to kind of dunk on the multi-trillion-dollar, generalized money view, just like how it was popular to just be like, yeah, prediction markets have been tried 10 times. It's not going to work ever again, like, whatever. But then very quickly, at the inflection point, it's going to be like, oh shit, like 3 or 4 of these are literally going to be like, the supply is going to be literally above 1 trillion, 2 trillion. And I really think that being patient, being methodical, and being confident that that's how things are going to play out, being long-term, just like Shane at Polymarket, your day will come, because the arc of history bends towards this exact outcome, and whoever's there and has been executing methodically. This is not just us, right? It's a few teams, right? I think that's when something even bigger than Polymarkets overnight kind of it looked overnight, right? And it like 0 to 9 billion or whatever, right? But it was years of conviction, right? And I think that this will be how it'll be.
Yeah, I'd like to zoom out, guys, and just kind of think about more of like some of the regulatory happenings, as well as what's happening in Venezuela, and just generally like with the US. We've taken over Venezuela, looking like we're getting Greenland. Like, this is all happening. I'm not sure how it affects the Fed. We got a new Fed chair coming in May. Sam's smiling. I'm sure he's got some takes here. Apparently, we're getting crypto market structure bill voting next week, which would be huge as far as kind of getting that through. So kind of like when we're thinking about some of the macro tailwinds here, Sam, are you more positive with regards to stable coins than 2025 for let's say the first half of 2026? Neutral, negative? Where are you at from the big picture here with regards to how it affects our little industry?
I was smiling because I was trying to think, do I put on my like geopolitical analyst?
Every man wants to.
Yeah, right. Like everyone becomes a geopolitical analyst as soon as like the Blackhawks like touch down somewhere, right?
Yeah.
But I think, look, Greenland is super fun. I'm gonna go off a little bit, and I think like what's really interesting about what the Trump admin is doing is like these things haven't been tried in this way. Like it used to be either regime change and nation building, or just like leave them alone and like negotiate some treaty or something, right? But these guys have a totally different view, and it'll either work really really well, or it won't. And so like with Greenland, actually, I keep thinking like, what's the point of like undermining a NATO ally in Denmark, and why wouldn't you just sign like a NATO agreement, right? And then I realized like maybe the whole point is like actually even more long term. People don't give Trump credit of like, it's like, oh, he's not long term thinker and all this stuff. In a world where like Europe is on its own, or like the US disengages and is only in the American hemisphere, right? You need Greenland to be in the American sphere of influence, because if Europe is in charge of its own security, or more so, right? Like these aren't, black and white, but it's on a spectrum. You don't want Europeans to be able to check American power in the North Arctic, right? And I'm talking like 15 years from now. I'm not talking next year. I'm not talking even like 2030. I'm talking like 10 to 15 years from now, where Europeans are remilitarized. They entirely are in charge of their own defense, right? And the U.S. does not have to shield them, because they are a civilization, and they've produced their own weapons. You don't want the Europeans to have Greenland as a stationing base against America as a bargaining chip. Not that they're going to like attack them or anything, right? You want to take that now, and how that pans out, I have no idea. And I have no idea about Venezuela and how that pans out. But if the entire like macro economy goes the way that Trump's strategy is, and they're able to lower rates, and this doesn't blow up in their face, and the U.S. gets sovereignty over Greenland in some kind of like pact of free association, which is like kind of adding territory, not a state, not full annexation, right? It's kind of the same way that Guam and the Marshall Islands and in the Pacific Theater are part of America, but they're a sovereign country. If that happens with Greenland this year, if Venezuela ends up, it just being essentially a flawless 30-minute special ops that gets all the benefits of regime change without all the problems of nation building and stuff, I think we're going to pump. I think we're going to pump massively, and that's my view. If these things blow up in our faces, and if there's new conflict in the Middle East or in the European theater, and the rates have to be cut because things are bad, that'll just cancel the rate cuts out, and like I think we're going to have a weird year. So I think it was Dave Chappelle. I was actually watching something that he said, and he's like, look, whether you agree with the president or not, whoever's the president at any time, you are rooting for him, because if you're part of the Western world, you're an American like me and stuff, you are rooting for them to do what is right for America. So we'll see. That's how I think about it.
Yeah. And then with regards to, go to him.
Well, I don't have too much to add, except for the one thing on Greenland was I saw an interview with Stephen Miller, who's part of this task force when it comes to Venezuela, helping run the country while there isn't really a president there. And they were asking him about Greenland. They were obviously trying to bait him into a headline about using military force against Greenland. And then he kind of he turned it back and was like who would they even fight? Greenland doesn't have a military. Like, I guess you'll be fighting Denmark, but Sam, you make a great point when it comes to just inking a deal with NATO. But America sort of already runs NATO itself. That is the security guarantee. So it was sort of a catch-22. It's like, wait, you could kind of just do the same thing with Greenland. People wouldn't be as happy about it. Maduro is a lot more problematic as a leader, but there's probably even less military force in Greenland than there is in Venezuela.
There's no one there. There's 70,000 people, right? Like, I think the reason people are a little confused about it is that the admin hasn't clearly said its real strategic reason, at least not like publicly in like a clear way. The goal, I think, from how I interpret it, is that the US needs to have this for a decade later, where the Europeans are remilitarized and in charge of their own security, so that this is not a European outpost, it is an American outpost. And they're not going to do any kind of military, like, there's nothing to fight, like you guys said. Right. Like, and so the reason they want this to happen is they want Greenland to have a vote for independence, right? Like a totally, like sovereign democratic vote. And then once they're independent, they obviously don't have the means to have their own security. They need to have some kind of direct relationship, which is obviously they think it's going to be the United States, similar to again, similar to Guam and the Marshall Islands. These are islands that are sovereign, but they need a security guarantor that has security sovereignty, but the people have representational democratic sovereignty over their own country. And so that allows the US to not actually have to bargain with Europeans anymore on Greenland. And so it's actually not about NATO. That's what's kind of confusing, because people are like, well, yeah, there's just, you could put a NATO base there. In fact, they have radars and everything for the past 80 years since the Cold War there. The point is something that is not NATO for the day after that there's a different security architecture in the European theater. That's just my armchair political hat.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
And so when it comes to the more, I guess, direct impact of the regulatory regime here, obviously we've got the Genius Act passed, but it needs to be implemented still. And I think you guys are waiting on that, or some sort of like legal clarity as far as like implementation. And then from what I understand, next week is the big market structure bill week. Sam, what is going on Capitol Hill, you know, from your people that you speak to, from the Frax perspective? Where are we at with the Genius implementation? What should we expect from next week? What are your hopes and dreams for this market structure bill? And then how do you kind of see all this coming together for the stablecoin market?
Yeah, so I'm pretty still involved in knowing the day-to-day stuff of Genius, less so anymore with market structure, because I think it's important, but it's not directly to Frax products. And I think fraxUSD and all these licensed, ready to go Genius compatible stablecoins will be able to apply sometime this year for a federal license or state, depending on what they'll do. That I'm pretty confident, because the legislation's passed. It's a matter of when, not if. And kind of goes back to, on the market structure stuff, the geopolitics, which is, if the bill isn't passed by midterms, I think that it's going to be very, very difficult for it to pass in this kind of shape or form, because what's going to happen is you're going to have politics, right? The Democrats want different priorities. For example, they're going to try to block a lot of things with Greenland or Venezuela or things like that. And they're going to be like, don't do this, just sign a NATO treaty. And like, don't do all of this stuff. And so the Republicans will have to negotiate and give up some certain concessions that Democrats, don't want to happen, like the market structure bill, the way that it is currently. And so then the odds of the things passing in this way become very, very low. So I'm watching it closely. I'm not there in person or anything anymore. But hopefully things get passed by midterms, because then there's a very low chance that this becomes the top priority after that.
And so next week,
it's crazy that you take concessions from some random piece of legislature as it relates to Greenland, and the concession is made over on the market structure bill. It's like those two things are so disconnected, yet the Republicans and Democrats there's bargaining chips, and they use these things in each of these bills to negotiate. But Sam, I wanted to ask you one other thing related to this, which is this FRNT token, this Wyoming stablecoin that came out today. It kind of seems like a nothing burger. It launched on Solana. Do you anticipate kind of the growth of stablecoins that you predicted, going into the first half of 2026? This, there's kind of these this synthetic dollars and then real, digital money. Where does this one fall? And do you think it's poised for growth? Do you think we're going to see more states launch their own stablecoins? And what would be the benefit?
Yeah, I was actually just looking at that earlier today with their announcement. I think this will be a good litmus test, like you said, whether it's a nothing burger or it's a great example of how states should do maybe their own digital dollar. And the reason I say that is no one owns, I mean, obviously it's like day one, but like no one owns this stable coin. I want to see if there's any real use case on chain or even off chain outside of very narrow payments or things in the state of Wyoming, right? This goes back to this end-to-end thing where if a stablecoin exists and it's not that useful or no one holds it, you know, does it really like actually exist, right? Like, is it actually something that matters? And so this will be a good example of like, look, this is a state-backed digital dollar. It can't possibly get any more like legal and tender and safe and whatever than that. But does it matter? Is it's that the main thing that is important? And so I think this is a good example of it's really safe. It's used in some parts of payments, but like, is it going to be orchestratable in like the global large payment processors like Stripe and WorldPay and stuff, or is it going to be on chain? You know, is it going to have actual holders? Because if you think about it, like if no one's holding it and no one wants to use it as a reserve asset, you know, for treasury management, all this stuff, it almost like it doesn't exist, right? If like a tree falls in the forest and no one's there to hear it, you know, does it actually exist? Same thing here. If no one holds it, if no one's using it on the blockchain. And so I'm not saying that's how it's going to be. I'm just saying like that's part of the fact that these stablecoins need to exist on the full loop, on the full stack to actually be useful.
Yeah, to your earlier point about full self-driving, so full stack is necessary in order for everyone to see the tree, hear the tree, make sure it falls.
And that's that last mile problem that a lot of these companies were trying to solve with stablecoins, right? Is this like last mile to actually being spent in the real world? And we really haven't seen much of that yet. But just to come back to your predictions and then close out, unification of token and equity, one big thing that I think we're going to see, and then it's this end-to-end stablecoin stack. Like it's no longer enough to just be a stablecoin in DeFi and a stablecoin on centralized exchanges. You need to be in the neobanks, in the payment processing, in the proof of point of sale systems. You're really looking to create like a full, you know, the furthest, most non-custodial looping strategy on Pendle using Morpho and some extraneous new DeFi app, all the way to like, you know, mom and pops, like, you know, PayPal account that they're using for spending. It's like that whole stack is what we're looking to basically replicate and create. So, yeah.
We are on Pendle, and we will soon be orchestratable and supported by Bridge's a stablecoin system through Stripe. And so, how many stablecoins can say that, right? Like they're on, you know, Pendle, Aave, and stuff, and in payments, right? It's I think I can count it on one hand, right? Like less than 5. So
Yeah.
that's actually a really good way to put it. Yeah.
Sam, have a great year, man. Looking forward to your big Q1. I know that you guys have a lot planned out. Thanks for joining us. First episode of Stable Up this year. Looking forward to keeping it going. We're on our way to the trillions in stablecoins. I think we had Hasib, he predicted a 60% year-over-year growth this year, which would put us to about 450 billion, if I'm not mistaken, 500 billion-ish. I think that we can go bigger, but we're on our way to a trillion, man.
Yes, sir. Always a pleasure to be on, and I'll take your side of it. I think we can go a little bigger and also contribute to part of that with fraxUSD.
Beautiful.
I love it.
Guys, thanks for watching Stabled Up. We'll be right back. Thanks, Sam.